We've been talking about a currency board instead of the central bank to manage this foreign exchange crisis in Sri Lanka. I've invited to our studios former Deputy Governor of the Central Bank of Sri Lanka, Dr. W.A. Wijewardena, to join us virtually. A warm welcome to you, Dr. Wijewardena. Now, with this conversation on a currency board, we just heard earlier on former Deputy Governor, again, Dr. Nandalal Veerasinghe, who insists that Sri Lanka's monetary independence will be lost. But when I spoke to Professor of Applied Economics of the Johns Hopkins University, Steve Hankey, he suggests that this is Sri Lanka's last resort. What is your opinion?
Well, in the way, currency boards are not strangers to Sri Lanka because we had a currency board system during the colonial period from 1884 till central bank was set up in 1950. What Sri Lanka at that time did was that it opted to deviate from the currency board system and establish a central bank because it thought that central bank would have a greater flexibility and also greater monetary independence. But countries like Singapore and Hong Kong continue to have the currency board system even though they were considered as a relics of the colonial masters. Now, in my view, given the present situation in Sri Lanka, the currency board system is the best system that we should have because it will actually enforce discipline on the Sri Lankan politicians and also the top leadership in the central bank. Because what matters to us in the way is that the central bank has been set up in Sri Lanka to provide medium of exchange to us, the people like us, and it has actually got a very solemn obligation towards us to maintain the validity, maintain the value of the exchange that they have created. In other words, if I get a 5,000 rupee note today, I must be able to buy the same basket of commodities with that 5,000 rupee note tomorrow. But this has not happened since the establishment of the central bank. Because if we take, for example, if somebody had got, say, 100 rupees in 1952, its value has today fallen to less than even 1 cent. Because the reason is that the central bank's powers had been abused by the political masters, and as a result, central bank had printed more money than necessary, which had led to inflation, and that inflation has eroded the domestic value of the Sri Lanka rupee, which we call inflation, and also the external value of the Sri Lanka rupee, which we call the exchange rate. On both counts, I think Sri Lanka has lost. Given the present situation where Sri Lanka's present management in the central bank had allowed the money supply to increase by about 3 trillion during the last 25-month time period by 40%, which had caused an enormous inflationary pressures in the economy. If we want to enforce discipline on the central bank leaders as well as the political masters, what is necessary today is to have a currency board.
About disciplining politicians and the central bank leadership, or a discipline to the economy and our fundamentals here, where we showcase our stability to the international community. How do you respond to claims or concerns that our monetary independence could be lost in the case of an appointment of a currency board?
Well, in the theory, the monetary independence has already been lost because as the numbers that I have quoted, 100 rupee in year 1952 is worth even less than 1 cent today, means that the monetary independence have been abused by the central bank's leadership and the political masters. So that is not what the nation expects of a central bank. The nation expects the central bank to issue the medium of exchange and maintain the value of that medium of exchange at a stable value so that people can make choices not for today or tomorrow, but for the longer period. They will have to take into account the inflationary tendencies in the country over the next 10-year period, 20-year period, and make choices today. And that is how we develop a nation. Now, this is how Singapore became a developed country within a single generation because they didn't want to abolish the currency board system and go for a central banking system like all other countries which became independent from the British Empire, and they continued with the currency board system. And when the currency board bill was presented in Parliament, its first finance minister, Dr. Goken Sri, he actually made a historic speech in Parliament. He said, by having this type of a policy, we are going to communicate three messages: one to our future politicians, the second one to our own citizens, third one to the people in the rest of the world. The message to our own future politicians is, if you want to incur vote-catching expenditure programs, you have to bring money from homes and not money printed by the central bank.
Thank you very
Our own
much.
citizens.
Thank you very much, Dr. Wijewardena. But very quickly, before we go in for a break, that's all the time we have. Don't we have too much external debt to go in for a currency board? Very quickly, a short answer.
Yeah, there are practical problems here, because if you want to set up a currency board today, we must have at least a foreign exchange balance of $4.5 billion US.
Right.
Because a currency board will have to cover the entire reserve money issued by the central bank today. But of course, it is worthwhile objective which Sri Lanka should pursue, because it will discipline the monetary picture of the central country and also
Thank you very much for your time at such short notice, Dr. Wijewardena.